Happy Friday, traders. It's 8 a.m. Chicago time on Friday, the 17th of January, 2020. This is episode number 1674. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Surprise, surprise, shocking action today. We're in a gap up to new all-time highs again. In case you're not complacent yet, this may help you get more and more complacent with your trading. Just buy and hold type of environment continues. Yesterday, after a gap up, the market was unable to test down and continued higher, and we ended up resolving with a parabolic move higher on the close in equities. Even the small caps gapped up and pushed strong in the Russell 2000. Today, the Euro Stoxx 50 leading the pack up almost 1%, 36 points. The DAX follows with 0.74% up 100 points, and crude oil. I want to remind you that crude oil is trading in March 2020. Might as well get the announcements out of the way. Two things. Today is monthly options expirations. In the indices. It is the third Friday of the month, so you might keep that in account. And then the second announcement is that crude is trading the March 2020 contract that rolled yesterday. I did announce it yesterday, and I'm just reminding folks today to trade the March contract, not the February contract anymore, not G0, go to H0. That's where we stand. Again, happy Friday. So the bonds are off an entire handle this morning. The bonds are off. Bond futures are down 1 point and 1 tick so far. The euro is off 0.34% on the futures, trading at 111.37.5. The cable's off. The treasuries are off. The Bund is off. The Bund's off 11 ticks. And the yen is off. So those are, other than gold, which happens to be up $4.40, trading at $1,555. All of the safety assets are down, and all of the risk assets are up. The market has a very, very strong risk appetite, as you probably saw from the chart over day after day after day, and this continues through today. So that's where we are. Let's take a look at what was expected yesterday in our review portion. And the only reason I do this review portion is because hindsight's 2020 all the time. People come on and say, see, I told you so. And I prefer to build the scenarios pre-market, look at what the market responded to, and then simply look back and see what clues there were and how things worked out. So the primary scenario yesterday is we are likely to have an open auction that makes an attempt lower, unable to tackle the gap, go down and close the gap. And then my expectation was that it would likely push higher and out above the overnight high. And then I expected a balance once we pushed the highs. I expected a balanced type of arrangement where we would most likely return back to the open and just trade sideways. Now, I can argue that that's basically what happened. We just didn't, I didn't draw the parabolic move at the end, which I could not. There's no way for me to predict that. One could argue that it was scenario 3. It was not scenario 3 yesterday. It was a balanced market until it broke out. So here's what actually happened. You can see from this Renko that it's not taking up the full screen or multiple screen widths on a 1920 pixel wide screen here. And there wasn't all that much action. So this is all anticipated. This is the balance I was looking for, and I was looking for it to break higher, push up, and then fall back in once it makes new highs. We generally don't gap above a century figure and just continue in a parabolic move like we did here, but then we generally don't push all-time highs. This is kind of historic event. We're going through historic events every day. In the balance, in the balance portion of the profile, look inside of this box I'm drawing here. What on this chart captures your interest as we're looking at balance? It may seem pretty mundane. Yes, gap up, sideways. This is an open auction. This is an open auction out of range. Where's my OS low? It's kind of strange. My OS low is, for some reason, way below. Let's put it at 3,300 and move it up. So my OS low was right in here at 04. What captures your interest here? Here's what captures my interest. As the market is going sideways, the delta holds steady. It is playing along. It's hanging around zero. Zero is the equivalent of the opening price. As I've said many times, the opening price is marked with green dots. And that's the zero. That's the equivalent of the zero line on the delta. The delta is ask volume minus bid volume, and using tick data, using unaggregated pure tick data from IQ Feed here, with a consolidated tape. And what you see here is that for the most part, we have an open auction at new all-time highs that sits sideways. We have balance. Balance is likely to lead to imbalance. That's a given. But then what happens is in the middle of the day, once the Europeans start to close out, we start to see the delta falling. We start to see the delta falling as the market is kind of sitting sideways. And what this led me to believe that it is likely that that whoever is long into the gap is starting to lose. Those participants are starting to lose confidence in a continuation play, and so they're hitting the bid, taking profits, potentially initiating a short, which I just don't know who would initiate a short except for top pickers. And as they say, or they used to say a long time ago in the pit, top pickers get bloody noses, and so this selling in the delta is pretty persistent through this phase of balance, which was kind of interesting. And then, of course, as soon as it starts to break the IB high again and start to go parabolic, we could see that there's some lifting here, some urgent lifting. But overall, given the extent of the move from the open, the size of the move from the open, which is about 13 points, the delta is not all that interested. It's not participating aggressively. This is a market that is now drifting up in drift mode. Whereas the day before, you can see that the delta was parabolic and was pushing higher into the close, kind of playing along with the draft, the push back up from the lows. It seems like participation is waning a little bit on the aggressor side. The delta only measures the aggressor because we're only measuring what crossed the market. Those participants who felt it urgent enough to buy that they would cross the market and lift the offer, and the opposite for the sellers. That's what the delta is measuring, and that's why it's a kind of a key piece of a key metric for how I look at things. So that's an interesting thing. And then we ended up trading a whole lot at the high, creating what looks like an additional distribution or an additional high volume node. And as you probably heard me say, if you've been around a while, when you have a high distribution, a high volume node on the upper end of the range, after a break higher, we are likely to continue to drift up into the extended hour. So I expect a higher high in the overnight session, and we got that. So let's shift gears and look at the overnight session. Pretty straightforward, pretty classic action. We open back up. The auction is interrupted by the closure of the pit session, and then it opens up and it blasts off. So we have a what is a classic blow off top right here. And then the market is just exhausted. It spends the entire Asian session sideways, and then the Europeans come in and we start to drift up once again. We have a weak high. We have good volume, decent volume. It's pretty much in line with the, what we've had recently. And we have price that is 100% inventory that's 100% long, with delta also long. So the overnight session ended up playing a little bit better in terms of lifting power versus price gains on the buying side. It ended up playing better and in a lot more in alignment than the day session did until the close. Look, I'm going to say it again. This is not my favorite kind of market because I don't have an auction reference point to the left. One of the greatest things about the profile, whether you use market or volume, is it's especially volume for me. One of the greatest things is that it tells you not only are we looking at price, which everybody, there are three components, that's it, to the market: time, price, and volume. Everything else is a derivation of that. It's a derivative of that. And so, to me, organizing information in terms of volume at price tells me a piece that is more important than volume per bar, which is a classic thing. This volume histogram down here, this bottom pane, is telling me how much volume went into this 15-minute bar versus this 15-minute bar versus this 15-minute bar. But what's important to me in looking at the volume profile is how much volume per price. I don't care about a 15-minute bar. The beginning and the end of the bar are very arbitrary periods of organizing information. But the volume profile tells me the volume at price, whether I look at a 10-minute, 60-minute, 120-minute, 5-second, 15-second, 1-minute, 5-minute, doesn't matter. The volume at that price stays the same. It is very consistent across time frames. There aren't, not that I know of, there aren't other ways to organize information that have that sort of resilience across time frames, so that it doesn't change depending on the chart that I'm looking at. And this is why I was very attracted to volume back in 2005 and developed this idea since then. And so what we have now is a profile that's got quite a bit building at 33, 24, 75. We've been trading here for a while. I've been up since about 4:30 a.m. Chicago time, sitting in front of my screens here doing some work, and it's just been up, down, trading around this price. We finally popped higher and we came right off. I'll show you that on Bookmap, on the order flow. You can see here that we've been stuck in this area for quite some time. We have a fair amount of liquidity at the next 10 figure above at 33.30, and we could see the depth is thicker up top than down below. I expect that we are likely to continue to rotate higher. We do have a weak high overnight, and we have, as we continue to participate in a pretty bullish way. We've remained above the blow off top that we put in on the open. The high there was 33.23 and a quarter. You can see that blow off top as soon as I scroll back right there. Right here we open up, we blow off pretty good, and then we hold sideways, and then we come back, and then this blow off top acts as sort of a support temporarily. And as long as we're staying above where that is, above yesterday's high, then we are likely to push into the liquidity above at 33.30 and 33.33 and so on. I'm expecting today to be a fairly, it's options expiration, so there is a little bit of hedging and things like that going on. We're above a major figure at 3,300. We've not only pushed above 3,300, we've moved almost 30 points beyond that. It's quite incredible, the performance. And that's what we're seeing here, folks, is what happens when you inject $220 billion into a market over the last 3 months. So that's where we're at. Now, let's get back and look at what we have in terms of today. I'm sure you've noticed that it's kind of the same thing day in, day out. day in, day out, the same structure, the same idea. I'm saying the same thing. It's pretty boring. As I said, this is a perfect market to be complacent. While we're doing this, I'd like you to hit the like button. Take a moment now to find the like button on YouTube. If you're looking at this on Convergence page, you can find the YouTube button at the bottom of the player, bottom right, I think, of the player, and hit it to be taken to the same video on YouTube, and then just hit the like button. Do me a favor and do that, please. Um, so, what have we got today in terms of what's scheduled? There is, we've gone through some relatively important figures. Building permits came in much worse this morning. A forecast of 1.6 came in at negative 1.6, came in at negative 3.9. But housing starts extremely strong. Housing starts to just markets roaring. The housing market's roaring here. The expectation is for negative 2.6, and it came in at plus 16.9 month on month for December. Traditionally, a weak month for housing starts came in at 16.9. That's got to be some sort of an anomaly or calculation issue or something. Pretty insane how far off that number is. Again, that is about a 19% upswing from expectations. Housing starts came in at 1.608 million versus 1.3, again strong. And then building permits, which came in a little bit weaker, came in at 1.416 million versus 1.45. Feds Harker speaking currently, and we get industrial production. We did get industrial production cap utilization. Cap utilization comes in about a half hour. But this morning we get Michigan sentiment prelim, which can move the market. That comes in at 10 o'clock, Eastern, 9 Central. And then after that, we get Fed's quarrels at 12:45 p.m. Eastern, and then we wrap up the day and the weekend. So in terms of what we're expecting for today, this is too scrunched up. I'm pulling up my stock zones. These are proprietary zones where I expect the market to react. Just as a reference point, we're trading right up here on top of the point of control at 24.75. Again, we're opening out of range. We opened on what ended up being a trend day from balance. So the expectation, you guessed it, is an open auction out of range. Look for an attempt to push lower. Look for it to consolidate, go back, take the overnight high, and then hold steady in here. I'm expecting the market to take a rest. We're going into the weekend. There isn't anything spectacular happening this weekend that we're aware of. No wars with Iran, no fighting with North Korea, no fighting over car manufacturing with Germany. Although we're starting, the U.S. government's starting a fight with France over the, what is it called, the digital tax or something like that. So I don't think the market has too many concerns going into the weekend. Monday is a holiday. I want to remind you, Monday is in the U.S. is Martin Luther King Day. It's a holiday, and I believe the markets open, the cash markets may not be open. So take a look at the calendar. It is a holiday weekend that may impact how the market closes. I expect the market to turn down, potentially turn down on the close. The other play is, given how we've played out, we've got a gap zone beneath us yesterday. A little bit, gap zones are weak structures in that they have not been auctioned. I'm looking for an open auction that squeezes higher, impulses down, comes back to the middle of the range, and tests the prior high. And if it does, break through this stock zone here I have at the overnight low, 33.16. It is free and clear. This trade, if we look, I'm not going to advocate for a short here. It's insane to advocate for a short in this market. It's a pretty bullish market. It's really taking off. We've got multiple $1 trillion companies now. in the US. So it's insane, but if we do get through 33.16, it looks to me to be free and clear into 33.09, and that's the hold. Now, I would caution and not advocate for holding a short runner, but if we do clear that 33.16 area, you may see another 8 points relatively quickly. Again, that hasn't worked too well for the shorts over the last 6 months or so, 3 months, I guess. But there it is. Because we're in a gap, I'm going to do the same thing as always: open, test down, drive up, consolidate, and then squeeze higher into whatever measured move level is above. These are the three scenarios. It is not fun for me to trade this market, so I occupy my time with finding whatever trades look good in the first hour, hour and a half tops, and then I'm gone. My time is better spent elsewhere. I do not like sitting in the grind like we saw yesterday before the closing range rally that we got on the close. Again, make sure you hit the thumbs up. Hit the thumbs up. It is like Friday, and I appreciate you coming in and listening to me. Hopefully, you've gained something this week. Remember, the theme for 2020 is consistent improvement. It is the end of the week. Hopefully, you took the time to set some goals at the beginning of the week. Hopefully, you learned something and improved just ever so slightly coming into Friday. Hopefully, you'll take the time on Sunday or Monday early morning to review your performance this week. I prefer that you use expectancy as a metric of your performance. And then to set a goal for next week so that you can be patient, you can be a better trader, piece by piece by piece by piece. Atomic habits, little incremental gains. Unless this is a hobby for you, that's the way to go. You are here to improve every single day. If you're not, then you have lost that time and you could have done something better with it. You can always start tomorrow, but why not start today? Good luck.